Hey, what's up, everybody? This is Evan Carthy from evancarthy.com. Today is August 1st, 2020, and we're going to go look at the upcoming week for the S&P 500, Dow Jones Industrial Average, and also the Nasdaq. So starting off right now, we're looking at the E-mini S&P futures, looking at the hourly chart right here. Got a little bit going on, but I'll break this down here real quick. So what we're looking at, backing up a little bit, is there's a pivot point here, low I'm using right here, then a pivot point high I'm using right here. You see price had already come up, hit this target box, and retrace down from it, so let me remove that. So the current target we're looking at for this move is going to be about 32.97, right around there, 32.98, excuse me. So this is the target move we're looking for. As you can see, again, looking at the hourly chart, price came up right here, pivot point high, went, got locked in right here at the 38% line, started going back up here about 2 weeks ago, never came up and filled the target, but instead moved back down, been waffling around ever since. Then it looked like after kind of making a double or triple top up right here on Friday at the overnight session, or right when the market opened, excuse me, and then overnight U.S. session, it started breaking back down right here. Look, it's going back down, but then once again, when it hit the support level of this current move that we're in, long move, when it hit about the 50% retracement area for it, found massive support, and then late in the day, the last 1, 2, 3, about 3.5 trading hours, went nothing but straight up for it. So with that said, it's still valid for what we're looking for, about 32.98 for this target for it. So we'll see if that is going to happen. But if price does come back down, breaks slightly below the 78% line, then this long move will be over. But currently there is a lot of support going up there for it. And then moving a little bit down here for the 15-minute chart, we're looking at this pivot point low down here, this pivot point high down here. See price came down and retraced down between the 61.8, found a lot of support right here just north of the 78.6% level right here, and has been, again, as you saw on the hourly chart, has been skyrocketing up here ever since. So the target we're looking at for this long move is about at 32.92 right there. That's where that's going to be. And then if we go down here in the really short time frame right here, in fact, I'll remove this 15-minute time frame off right there. If you go down for the 2-minute time frame, you can see using this swing high up here, or excuse me, the swing low right here. Swing high currently, which is pretty much almost the high right here. What we're waiting on for this 2-minute setup right here is we are waiting for price to do some type of pullback right here. So we're waiting for price to eventually pull back down to the 38% line. Whether or not this pivot point high holds or not, who knows? But if it keeps going up without retracement, I'll just keep moving my Fibonacci level up there. But that's currently where it's at. So if this is going to be the swing point high, we're looking at least for price to come down to about 32.54 to get this long setup activated right here. Then the exit we'd be looking for right there would be around 32.81, 32.82, which would get us out of that setup right there. Excuse me, it's going to be a little bit lower actually. It's going to be about 32.8025. And the reason why I normally was using the 1.272 as my X level for the Fibonacci extension level, but then after last week doing a whole bunch of back testing for it, I've decided to really look at using the 1.236 Fibonacci extension level. Reason why I missed a trade last week because price came up, hit the 1.236 Fibonacci extension level. I had my exit just slightly below the 1.272 like I normally do, but didn't get enough to get filled. So price hit that and started moving back down. So instead of getting a really nice gain out of it, ended up taking a small loss on it. So lesson learned right there for me. So that is why I'm looking at the 1.236 Fibonacci extension level as being my exit for it. And also that's the extension level that the guy over at E-mini Addict uses, and that's where I got it off of him. He's one of the people I do recommend if you're looking at using Fibonacci extension and retracement levels. He's got a real good setup for it. His name's E-mini Addict. Check him out if you haven't. Between him and Mac with his price action trading, those are really the only two guys who I do recommend. But anyways, a little tangent going off over here. So looking for eventually the 2-minute chart to retrace down eventually and start that long setup to eventually go up and perhaps hit up there. But there's a lot of support going on here in the S&P 500 markets for whether or not we see a little bit of a sell-off to start off the week or when the market opens for it to get that 2-minute one activated here down for it or not. We'll just have to see. But definitely very bullish in S&P 500 despite what everyone's saying out there in the market. Hey, everything is just going to crash, crash, crash. It's still not set up like that for the technical side of it for the crash to occur. We're still in a bunch of long setups on the hourly chart, 15-minute chart, and looking for another one to get set up here in the 2-minute chart. So starting off in this week, very bullish on the S&P 500, and then we'll look at the long-term time frame over here. So I revised it a little bit. Still hasn't changed too much of it. I just adjusted where my pivot point high is, and we're using the top of this one right there. And then using, of course, that pivot point high right up here, right around, what's that, 3402. So you can see price retraced all the way back down here, found massive support when we had that sell-off in last March. That hit between the 50% and the 61.8%, and ever since then has been rocketing on up. So the target area we're looking for, let me go adjust this here real quick. The target area we are looking for is going to be slightly lower than it was before. I think last time I did a video, I was saying I was looking around about 4,000 for the S&P 500 for this current move to be the target area. But what I'm looking for right now is going to be around 3867, or excuse me, 3874. You can see right there the 1.236 Fibonacci extension level. About 3874 is the target area that we're looking for right here. And you can see over here, if you look over to the left-hand side, this gap right here that I've been preaching about, looking for to get filled. Price is getting very close to it, but still has not gotten up there and filled it quite of yet. So it's looking like here in the next couple weeks, we can expect this gap to come up here and to get filled. Now, looking at the daily chart, we are currently in another long setup as well, using this pivot low right here. This pivot high up here, you can see price came back down, hit right off the 50% trade. So that right there is the absolute perfect trade, especially what the guy from E-mini Addict, what he talks about right here. When you see that bounce getting off the 50% right here, this is just signaling this is the algo traders. These are just tons of massive money right here. That this is an extremely technical setup right here where it found its support right after 50%. Just hit it once, never came back off of it, or never came back down and hit it again. So the target area we're looking for this current setup that we're in for the S&P 500 as well here on the daily chart is going to be about 3369.75, so about 3370 if you want to round up a little bit. Nice round number. So we're looking for about 3370. So based upon all that on the short-term time frame up to the daily and the weekly chart, again, still very extremely bullish here on the S&P 500 until these bear setups start happening for it. Don't listen to the pundits out there saying that the market crash is coming, GDP's in the trash can, all that kind of stuff. Whatever it is, something is keeping the market afloat from crashing, despite what all the people on CNBC and all the articles coming out are saying. So until you start seeing big weakness in the market, there's no reason to believe it, because on the technical side, it's showing nothing but bullishness within it. Then we're going to look at the VIX here real quick, because if you're not familiar with the VIX, basically what it is the inverse relationship to the S&P 500. So when the S&P 500 is going up, the VIX is going down, and when the VIX is going up, the S&P 500 is going down. So as you can see, since the S&P 500 has been going up, the VIX has been going down, and it is currently in a short-term setup as well. So this is another reason why I am still expecting the S&P 500 to go up until a couple of things happen. One, until the VIX comes over here. You can see, looking over here a little bit to the left, it fills this gap, this big gap that created back in February when price just shot off for it when the S&P 500 started going down. Until that gets filled, and also until this target area that we're looking for right here at about 12.5 here in the VIX. That comes down here and gets hit as well. So once those two things happen in the VIX, this will also mean that the S&P 500 is continue to go up. When that happens, then me personally, and this is just me personally, what I am looking to do, especially on my long-term holdings for it, specifically like 401ks, things like that, is I will move probably at least 50%. I still haven't decided exactly how much, but I will reduce my exposure to the market. Let me just show you the reason why here, because the last time we had the market get hit up here, you can see this is the target box right up here. You can see the target box. It got hit right up here. That's when price just straight, you hit there with that week right there. And then in the second week, that's when the downturn just started right there. So it's always smart, in my opinion, for the way I trade, when a target area does get hit, take some profit off the table, and then let you can do whatever you want with the rest. But I'm definitely looking at when either price comes up here and it hits this next target area about 30.67, and or the VIX gap gets filled or that target area gets hit on the VIX, looking to take some of the profits off of the table. But as you can see, it doesn't work 100% of the time. It did that time, but then as you can see, when it hit this one right here, it had a little, just a slight big pullback, and then it kept on rocketing up. So, but just seeing how the market is really just extremely strong right now, especially all the turmoil in the world and everything, never hurts to take a profit. Again, sorry about the tangent right there. I just wanted to relay what I was looking at doing for it. Now for the Dow Jones Industrial Average, we're going to look at the 15-minute and 2-minute chart for it. Now, this one is slightly different for the Dow Jones. It is currently in a short setup here on the 15-minute chart. You see, using this rep here, that's going to be the pivot point high. This one down here being the pivot point low. Price came back up, hit right off the 50% level right here. That's what this green line is right here. In fact, I can highlight it a little bit better with a red box, which for me signifies that's going to be a retracement short box right there. So you can see price came off, hit off that perfectly, had a bunch of move downs right here. But then again, Friday, just like every other market, late Friday, the market just started going straight back up towards it. So if this is going to be a valid short setup right here, that we're looking for the target to come down and be completed right here. We're looking at the exit being around 25,620 for it right there. But as you can see, if you zoom out a little bit here on the 1-hour chart, it is definitely still in an uptrend despite this retracement that we just had recently for it. Now, looking at the 2-minute chart, similar, or actually pretty much exactly the same. That's what's looking at on the S&P 500 market. We are waiting for price to retrace back down to the 38% line. There it is right here. So if that pivot point high holds up there, then we are at least looking for price to retrace back down to about 26,249 for that long setup to get activated. And assuming that that is what happens, then the exit we'll be looking for there would be about 26,462 right up in here. But assuming those things happen for it right there. Now moving on to, last but not least, the Nasdaq market right here. We'll zoom out here real quick for it. And so as you can see here in the Nasdaq, we recently had, using this swing low, that swing high, price came back up here. There's the target box right here, and as you can see on Friday, it went up and hit the target from what we were looking for it right there. So that move got hit. As you can see, price came back down, hit right off that 50% over a couple different days, 1, 2, 3 different days, and then rocketed back on up late on Thursday, and then right before the market closed on Thursday and opened back up, it reached the target up there. So now what we do when that happens is we simply move this swing point high right back up to the previous swing point high, and there it is right there. And now you can see price came back down, down, down. Look at that, hit perfectly off of the 38% Fibonacci retracement level, which is going to be at 10 10,695. So currently what we are looking for, so what that does is that sets up the long setup right there. So that activates it, so it is in a long setup. What would make it be incomplete if price retraces all back down and starts closing back down below the 78.6. So quite a big drop for it to go, for what I look for that to be kind of the point of return, for it switches over from the long side to the short side for it. But that's just the way I trade. And so the exit we're looking up for here from this current trade for this long setup is going to be at 11,090, about 11,091-ish, or 11,090 would be just fine. So that's the current exit. We're looking for that 11,090 right there. And then again for the 2-minute chart, just like the S&P 500 and the Dow Jones, similar or pretty much the exact same setup. We are waiting for the for eventually price to retrace back down. Whether or not this pivot high holds or not, yet to be seen. Assuming it does hold, price traces back down to at least a 38% line, which would be 10,863 and 50 cents. That would activate the long setup. And then the exit would be looking for up here would be about 10,955. So as you can see, pretty much every market is extremely bullish right now. Specifically, the S&P 500 is pretty much all long setups that we're looking at right now. Same thing for the Nasdaq. The Dow Jones, as I showed just a little bit ago, it does have a short setup, which is a little bit different than the S&P 500 that we were looking at for it, because you actually can see the difference between the S&P 500 and the Dow Jones is price came back up. That little kind of pink line right there is a 78.6 line, but price came back up high enough, closed north of it, and that signified that short setup is over. So then we would just be looking for long setups for it, and so that's the difference for it right there. So anyways, good best wishes trading for the week. Hope you're staying safe out there, and take care. Talk to you later. Bye.